Next is Italtile. This one is also doing extremely well. It's a company founded by the Ravizzotti family. Gianni Ravizzotti, I think, was the old guy. He's the one who established it in 1969. Starts off as an operator in that Italian tiles, bathware, sanitary ware, taps, bathroom accessories environment. But it's been an extremely successful group. It had a manufacturing and supply division called Ceramic. That's been incorporated into the listed entity. The market cap of this thing is 11.3 billion rand. Fabulous success story. Price earnings ratio 16.7, dividend yield of 1.95%. You've got to hand it to these guys. They've got Italtile, they've got CTM, people will have seen as well, and then another thing called
Top T.
Top T, that's what it is, yes. And those, again, as you said earlier, your high-end Italian marble chopped by artisans out of the mountain in Carrara or something, and then you've got the sort of lower-end stuff which people can use. And this is much more popular nowadays than carpets and those sorts of things.
No, definitely. I think, you know, if you look at it, it's one of the groups that we're looking at that really does manage to straddle all the LSMs. So, I mean, you've got Italtile, which I think they've got the big showroom on Bryanston, William Nicol, yeah. And they, I mean, that's really, I think they don't have many stores. I think there's only about 8 stores like that. But that, like you say, high-end imported taps, I mean, that, you know, you're going to struggle a little bit again because you're importing, and I mean, the sourcing is very important there.
But bit of rand sensitivity.
Yeah, bit of rand sensitivity there. Again, you know, then you've got CTM, which is
Carlo,
by far
Tito, Mario.
Carlo, Tito, Mario, exactly. And that's where the bulk of the business sits. I mean, that's where the huge footprint of stores is. I mean, they've marketed, obviously, the brand, as you mentioned. Everyone will remember those adverts. They've marketed it extensively, and it's doing well. And obviously, Top T, you know, really focusing on the lower LSMs, you know, sort of slightly more rural, not as, you know,
peri-urban locations.
Exactly, not in urban areas. So I think overall, I mean, obviously, like you mentioned, a family-run business, which it is. The only issue that I have with it is a very tightly held stock. I mean, we don't think it's particularly expensive. I mean, you know, at a 16 PE, we think that's right for the company. The problem is, I mean, you get days where the liquidity is actually zero. I mean, you get days where, and you'll see it, I'm sure, if you look at the chart, you see those little flat lines. Still, a good broker, if you prepared, and I think you should, if you're buying this company, be looking at a 3 to 5 year view. I mean, a good broker should be able to get you lines of stock on the company.
Because the deal there is that you could probably wade in and buy them at like 5% higher than the preceding traded price if you're in too much of a rush, which is a mistake. The better thing to do is to wait for days when there is adequate liquidity, maybe after results, or when there's a bit of news related to the company, or when there's an institutional buyer exiting or coming in. As far as the family control is concerned, old man Gianni's son regrettably, tragically died in a car crash, not an airplane crash some years ago. So then they had a sort of a leadership vacuum for a while. He stepped in, the founder, for a while, but now they've kind of taken the next step. He's back in a non-executive role, and the CEO, I think it's Nick Booth, has taken now the helm. Hey, Nick, I must be having a problem with names.
I think he also has stepped down, but we'll have to check that. I mean, but looking at if you look at the depth of the management at CTM. I mean, if you look at, you know, especially like their sourcing and support division. I mean, they've got guys there that've been running the business for 30 years. They've got long-term contracts for sourcing and long-term not contracts, relationships at least. I mean, I think the depth of management, while it is a family-run business, I mean, you know, guys will always give you grief. Oh, it's family-run, so you know the succession planning isn't right. Perhaps the dividend policies aren't going to be correct. But for me, I think, you know, the family is going to look after its own interest. I think it's also maybe that family legacy that's given that property underpin as well. But for me, that's not an issue. I think they're going to look after themselves, and by extension, they're going to look after shareholders.
And in time, there could be a little bit more liquidity if the family reduces its holdings slightly. I'm not saying that's necessarily on the horizon. But anyway, we're saying well-run company, nicely positioned, and overall the market's in a kind of an up phase as economic numbers look a little bit better, as gearing in the market comes down. So perhaps a little bit of a correction there at the end. How are we going to call this one, hot or not?
Yeah, again, this is, if I give you the ranking model, this is 6 out of the whole top 40. So this for me is still smoking hot.
Nice company, well positioned, good. We're hot on that one.